Chip almost doubled in the last 24 hours, and that's happening while 80% of the supply is still locked. So there's very little liquidity, a lot of price sensitivity. Is this potentially an opportunity? Let's have a look at the data most people are not considering. Now, first things first, there was a Binance listing of Chip. So that's versus Tether, versus USDC, and versus the TRI token. We are now close to 12 cents, and Chip tries to be decentralized finance for AI. It's the governance token for USDAI. It's got its own staking module, and it's also got a website showing some interesting stats. For example, almost 350 million of TVL already on the platform. The staking APY is 7.1%. That's above the current treasury yields. And what is this thing about loans and about NVIDIA chips? It's the idea of the protocol. We've got asset-backed lending, where the loans are collateralized, not with other cryptocurrencies, but with physical GPUs. In other words, we can leverage the investments that have already been made in data centers. We can borrow against all of that infrastructure and then use that capital potentially for new GPUs. There's been an ICO and an airdrop, and the price is just going straight up. Now, have a look at the market cap. We are currently at 243 million. Is this a lot, or is there still upside potential? Let's have a look at other AI big data related cryptocurrencies. USDAI, or the Chip token, is currently over here on that list. If the price was to double, we'd get close to the artificial super alliance token that used to be fetch.ai. If it was to triple, we'd get close to Filecoin. And if we were to quadruple from here, we get closer to ICP. So a bit over 200 million in market cap is actually not that much. If this price rally can create more attention, could easily double and triple from here. So market cap is not the limiting factor. Now here on the Arbitrum chain, we've got close to 5,000 holders. And here's how the number of holders have developed over time on chain. So we've got quite a bit of accumulation. And then with the Binance listing, many people move their tokens to Binance directly to trade it then cheaper. Parts of that decline is also engagement in the staking protocol. So staking is not shown in this chart. The effect is stronger for the smaller wallets. It's less strong for the bigger wallets. What's the difference between those charts? It's how many tokens are being held. So on the left side, it's 9,000 tokens. In the middle, it's 90,000 tokens. On the right, it's 900,000 tokens. So that's roughly equal to $1,000, $10,000, $100,000 worth of the token. I think many people are very skeptical of this rally. They think that this is a very short-term pump and dump by Binance. And while Binance tends to pump tokens to afterwards dump them, the duration of those pump and dumps usually is not just a day. Tends to be a bit longer. And so that's why I think that the perpetual futures traders that are currently betting on falling prices of Chip, they might actually have a hard time in the near future. The funding rate on the perps is currently negative, so there are more people betting on falling prices than on rising prices. And more often than not, especially for very illiquid tokens, we tend to see short squeezes. In other words, the spot supply gets bought up more to liquidate all the people that are betting on falling prices. Now, the trading volume is still going up, so are the short liquidations, and the open interest is also rising. And here's again what's so interesting about the situation. There is 161 million worth of bets on the Chip token. Is this a lot? Is this a little? We always have to look at this relative to the market cap. Now 160 million is very large compared to the market cap, which is just a bit over 200 million. In other words, it doesn't take much money to manipulate the price in order to then force liquidate the shorts. I think the likelihood that the Chip token will continue to rally from here, at least in the short term, is very high. The tension is still very high. Many people are betting on falling prices, and manipulating the price further to the upside is very cheap. The price is likely not going to dump as quickly compared to, say, the Siren token, compared to, say, RaveDAO, because this time we've got Binance behind all of them. Am I short-term bullish on Chip? Does it make sense to buy Chip and hold it over the next years? Probably not, but in the short term, the rally can very much continue. Now, CHIP is an outlier. Most altcoins tend to go down long term. Have a look at the performance of the medium-sized altcoins over the last year. There are a few outliers, but the vast majority lost the last year. And that's how I personally make my money. I tend to bet on falling altcoin prices because that's how the odds are in our favor. If we flip this around, right? If we make everything that's green red and everything that's red green, we just bet on falling altcoin prices relative to Bitcoin, we tend to make quite consistent gains. So the relative valuation trading wall is currently more than 10% in profit since beginning of the year, while Bitcoin of course went down. I'm sharing all of my trades in premium. There's also an automatic copy trading vault if you're interested in that. If you got some useful information out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish these regularly. See you next time on YouTube or potentially see you on premium as well. Cheers.